I live and work in this market every single day, and I can tell you what you're reading online about Orlando real estate is only about half the story. The growth is real, the opportunity is real, but so are the things nobody's talking about. I'm Tyler Gibson with the GPG team here in Central Florida, and I help people make smart real estate decisions so they don't end up stuck in the wrong area. I get calls every week from investors, some local, some out of state, asking the same thing. Does Orlando still make sense? So I want to give you an honest look at what I'm actually seeing on the ground right now, what the numbers look like, and where people keep getting tripped up. Let's get into it. So why is so much investor money flowing into this market? Because the fundamentals are strong. In 2024, Orlando ranked #1 among the 30 most populous metros in the country for job growth, population growth, and GDP growth. The Orlando Economic Partnership called it a triple crown. That almost never happens. We're adding around 1,500 new residents per week. That kind of growth creates demand, and demand is what drives rental income. But here's what I want you to understand. Our economy isn't just theme parks. Healthcare, tech, education, defense, the employment base has diversified significantly. That matters because a diversified economy means more consistent rental demand. If tourism has a slow quarter, you've still got tenants showing up from every other sector. Add in Florida's tax structure, no state income tax, property taxes below the national average, and you start to see why this market keeps showing up on investors' shortlists. Now let's talk about the actual numbers, because this is where most content online falls apart. The median home price in Orlando right now is roughly $385,000 to $410,000 depending on the source. Single-family homes are running closer to $416,000. Prices are up modestly, maybe 1 to 3% year over year. That's a very different story than the 15% jumps we saw in 2021. On the rent side, average apartment rents are around $1,782, which is actually down about 3% from last year. Single-family rentals are higher in the $1,995 to $2,050 range. But the point is, rents have flattened. New multifamily supply has come online, and the rapid rent growth from a couple years ago has cooled off. So what does that mean for you? It means you need to buy right, you can't count on appreciation or rent growth to bail you out. The deal has to work on today's numbers, not tomorrow's projections. Now here's the part that nobody wants to talk about. Carrying costs. Insurance in Orlando will run you anywhere from $2,300 to $3,400 a year, and for investment properties, sometimes more. That's roughly 2 to 2.5 times the national average. Florida's insurance market is stabilizing after the legislative reforms in 2022 and 2023, and several carriers actually filed for rate decreases heading into 2026, but premiums are still elevated. I've seen investors budget $1,500 for insurance on a Florida property and then get a quote for $3,200. That difference alone can turn a positive cash flow deal into a monthly loss. Stack that on top of a mortgage at 6 to 6.5%, property management fees, maintenance reserves, and no homestead exemption on investment properties, and the margins get real tight on anything priced above $350,000. This isn't me saying don't invest here. I'm saying know the real numbers before you write the check. One question I get a lot is, where is the best place in Florida to invest? And honestly, it depends on what you're trying to do. Jacksonville offers a lower entry point, median prices around $296,000 with solid rental yields. Tampa competes with Orlando on affordability, but multifamily vacancy there has risen to around 10%. Cape Coral and Fort Myers are more vacation rental focused. Ocala and Palm Coast give you lower price points, but less proven appreciation. What separates us from those markets is the depth. You're not relying on one type of tenant or one industry. We've got young professionals, healthcare workers, university employees, families relocating from higher cost states, international buyers. That diversity in your tenant pool creates stability. But if you're purely chasing cash flow at the lowest possible entry point, Jacksonville or Ocala might fit better. If you want a blend of appreciation and rental income with strong long-term fundamentals, Orlando is hard to beat. So let me give you the biggest mistakes I see investors make in this market. Number one, they're using 2021 assumptions. Rents have flattened. Appreciation is low single digits. Carrying costs are higher. If your pro forma assumes 5% rent growth and 8% appreciation, your actual returns are going to disappoint you. Underwrite conservatively. If the deal works at 2% appreciation and flat rents, it holds up in almost any scenario. Number two, they ignore insurance until after closing. Get quotes during due diligence, not after. Number three, they're chasing home runs. Everyone wants the property that's way under market with minimal work and strong returns from day one. The problem is, everyone else is looking for that same deal, and most of what's being marketed as a deal right now has inflated rent projections or underestimated rehab costs, or both. The investors who build real wealth in this market buy solid, boring properties at fair prices and hold them long enough for the fundamentals to do the work. So is this still a good market? Yeah, it is, but not for the reasons most people think. It's not because it's easy, it's because the long-term foundation here is strong. Population growth, job creation, economic diversity, tax advantages, those don't disappear overnight. But the window where you could buy anything and win has closed. You have to be more selective now. You have to understand the submarket. You have to run real numbers with real carrying costs. If you do that and the deal works, this is a place where you can build long-term wealth through rental real estate. If you want to talk through what we're seeing out here, reach out. Let's run the numbers and see if it fits your strategy. That's the whole thing. Know your numbers. Buy smart. Hold long enough for the fundamentals to work. Stay in the game.